I've been in the business for over 30 years now. In the last few years, one of my niches it's always been importers and exporters. But I've also seen a lot of people looking to buy these properties, foreign properties.
Hey, it's Steve Zelenardo here with Treviso Realty and RE/MAX expert Zelenardo Associates. We're here in Kleinburg, and this is going to be a little bit of a different segment. We're in Kleinburg where we're talking with my man, Philip Magnoli. He's my foreign exchange trader. He's at Aloris Mercantile. And just before we introduce Philip, it's important, like what we're doing in the States too, is to have a package for our Canadian clients. So we're trying to streamline everything to make it as easy as possible. And the thing is, I'm going through the growing pains. This is why I'm correcting things as I'm going through the process. And what Phillips does for me is I give him Canadian funds through our bank, through TD, and then ultimately he puts it into exchange, gets me my money quickly, and then we ship it to the U.S. with no difficulties, and also we save money doing the process. So this is the whole part of the U.S. process where ultimately we're going to be able to have different professionals for different situations, and this is one of them that we're going to introduce now with the new package going forward for the U.S. So, Philip, what's happening, buddy?
Well, Steve, thank you for inviting me to discuss your amazing projects and your services that you will provide. Yeah, you'll provide to your clients, especially me being in the foreign exchange business. I see a lot of people in today's day and age wanting to get out of this country or move money or have a secondary location where they can go to in terms of, running away from what they might describe as tyranny in essence, or being basically robbed of their generational wealth, right? Or, just wanting a secondary property and somewhere where they can go to enjoy and you reap the rewards of the fruits of their labor, per se.
I agree. I think that's the whole, we have a lot of Canadians that are moving out of the country for sure. There's a lot of that, but also a lot of just secondary property ownership, people that are looking for investments and,
Oh, yeah, absolutely.
Because ultimately now we know this is that Toronto's a dead market for investment right now. Currently in the market, we don't see I don't see an upside for quite a while, to be honest. But again, other people have more, different glasses than what are they called, rose-colored glasses, but I see it a little differently. So this is why we're making that shift into the U.S. We see Florida as a thriving market, and plus the weather's fantastic.
Yeah.
And you're part of the process, because I'll give you an example. When we bought our original house last year, because we started this journey about a year ago, and, anytime you're exchanging money, for me personally, I'm always fearful, even if it's directly at a bank. So I got to be honest with you. This is, we started with small sums, now we're going into larger sums, and now we have this whole trust factor. Not to mention, you referred to me by my great client. I got to give her a plug, Rose. Thanks, Rose. And so Rose, my client Rose, has been buying property in Florida for way before I have, maybe 5-6 years ago, right, or 7 years ago. So ultimately, they've been using you through this whole process. It's a streamlined service. I call you, you lock in the trade. It's not like I have to wait for some very long process through the bank where someone's dealing with line of credits, mortgages, and bank telling, and then he's going to lock in my rate. I call you, you're the man. You're like, okay, dude, it's done. We're locked in. That's the rate. Obviously, you guys charge percentage on the exchange. Naturally, everyone's making money, but we're getting a better deal through the process and 20 times better service. So I can call you anytime. This is what's important to me, is that I have a relationship with you. And it's not to toot Philip's horn too much. Philip sends, my son took my phone now, but he sends a text message to me every day as the market changes with the foreign exchange. And it's amazing because you're talking about everything that I don't know nothing about. And I'm starting to learn. I'm just trying to get an idea of what's happening. But you're talking about how the oil affects it, how the U.S. jobs or the bond. There's this whole calculation that you use to forecast when we should buy, which is awesome. And yeah, if you want to give us some talking points too,
Absolutely. I've been in the business for over 30 years now.
Wow.
And I've seen a lot of in the last few years, one of my niches it's always been importers and exporters, but I've also seen a lot of people looking to buy these properties, foreign properties. I'm not a tax consultant, but I've seen people buying in Portugal, And there's circumstances there as foreign investors that you always have to be aware. And that's why you have to talk to the professionals when it comes to your tax situation. My specialty is foreign exchange. So what I try to do as best as I can is to provide information and updates. I do that on a daily basis for people that are in tune and what they need. So I know you might have a closing in June or July, but you need to know what's happening today and what the benefit is as an individual versus a corporation. Individuals have to apply for what's called an LEI registration number, a legal identity identifier, entity identifier, in order to transact into what they call a forward contract. So if today, let's say the dollar was at $1.25 or 80 cents, you can buy those dollars today by putting up what's called margin of 10% and buying it for your closing date, which might be in June or July. But today, with the rate at almost 140, let's take a wait and see approach and keep updated, because what goes up eventually comes down, and timing is everything.
Yeah, it's obviously we're not concerned. Naturally, this is the position that we're in. We lock the money in a GIC, obviously, with that massive sum that needs to cross border. So obviously, we're trying to counter what's happening with the exchange with the GIC. Hopefully, it makes maybe half or a little bit more than half of what we're losing on the exchange, because we bought the house based on 132, I believe. Actually,
yeah, I remember that. You telling me. Yeah. That was our target. We got down into the 133s.
I'm in the process. So we bought July. Oh shit, we bought Lord, man. No, yeah, right around. We bought it in the middle of July, around my birthday. So 130-ish. So we bought at 130. So we based on all our numbers on a dollar, so basically 130. So every U.S. dollar is $1.30 to buy with the Canadian dollar. So that's what that equates to, if nobody knows.
Yeah. So when you find out, when they talk to you in the marketplace, they might say 70 cents, 80 cents.
So for context, on $1 million, that's like 80 grand, isn't it? Isn't that what that is?
Of the differential?
Yeah.
Yeah. So if you base the differential today 8 cents, yeah, it's $80,000 differential just on the exchange rate. But if you're doing the 130, you were there when the dollar was at roughly 77 cents, right?
I look at it this one today. I don't like it the other way.
Just recently, we dipped below the 73 cent level, right? So that differential is huge.
So it's 7 cents difference since I bought in July, and it didn't come back down. Oh, it was here. Oh, September.
Yeah, it was recently in 133-ish.
Did anyone ask me?
75.
One blip. And it happened on a Saturday, 126. What was that? Was that just like some malfunction?
That wasn't there.
Yeah, we never went, right? Because it was Friday, it was like 131 or something. Then it was like 126 on Saturday. But it was some blip in the system.
I didn't see that, but it might have been a blip on what you were looking at.
Yeah, fair enough. But it's not on this one. On your site here on the Loris Mercantile, it was the something. It was probably just the Google one. There
was someone with wishful thinking. Maybe that's possibly what happened.
I was going to call you Phil. We buy it Saturday. But
in terms of the process, like you were mentioning, Phil, we still have to go through what's compliance, and people have to apply to maintain an account or to hold an account so that they can deal with us. Today, it's all about compliance issues, and what we do at Aloris and what we're known for is our fraud prevention program.
Nice.
And what we try to do is that we try to protect, because today in this world of electronic world, it's easy for someone to penetrate or infiltrate your own personal emails, especially on the corporate level, and create fraudulent acts where you're thinking you're speaking to someone, or they've taken the identity of someone else that might be a boss or an individual, and direct you to send money to someone else or another account.
Yeah.
But in those type of situations, what we stress is that you verbally confirm with the people that you're dealing with, rather than just taking the information that they've given you by email. So that's one of our strengths, and we've seen a lot of the.
So how do you prevent it? I'm gonna grab a fill.
It's about feeling. We have a protocol that we follow. And the biggest one is the verbal confirmation. and we check the wire instructions to make sure that they all follow. We have our processing department and compliance department. They're very thorough, and we just do all our checks and balances before we send that money out. It's like my father taught me in his trade. He was a plumber for 50 plus years, and he would always say, it's always better to measure twice and cut once. So in our money business, it's always better to check before you send the money out. But part of my service,
Process with that. How do you check? Like, for example, we need over a couple 100,000, maybe more, 400, something of this nature. I think, yeah, just about.
in terms of us checking, it's
So, yeah.
yeah. Again, it's the protocol that we follow. It's a step by step. I don't have it in front of me per se because it's a processing part. I do more or less the sales and the trade in respect to that. But I can follow up with that in terms of providing you that information and what we do in order to just put the client at ease. Because you know what, dealing with an independent and other than the bank, a lot of people, when it comes even to the financing, the mortgages, they look at the four pillars of the banks as being the God-sent and the trustworthy people. But at the end of the day, someone's paying for those buildings. They don't discriminate against anyone when it comes for their ability to make money or profit.
For sure.
That's why the brokers have all, come into play, because they've been given the playground in order to try to make the money. But I wouldn't call it a playground. They've given you an opportunity to save money. And it's always about that trust and building relationships. That's what I've been doing. I've been in the business for 30 plus years for a reason. Because when you play with people's money, you play with their lives.
Absolutely.
And once that's gone, you've lost all credibility.
And that's my fear with anything. So when we started this journey in the U.S., obviously we're doing everything first. So it's like to have the growth. We're going to take the pain and then we're going to streamline it for our clients. And that was an issue with me with moving money. And it's all, of course, it was a trust issue. Like, I know Rose in the beginning of like our journey together, it was like Rose, she gave me your information, deal with my guy Philip, he's the best. I'm like, okay, but what does he work for? Is he a Scotia? Is he TD? Like, what's the thing? She's like, doesn't matter. He's good. He gets the job done. He's, you know what I mean? And you're save a few bucks, and it's reliable. Like, everything is on the up and up. So, because initially, but prior to me meeting you, I sent money over through TD, and it was this whole process, 2-3 days, and it was just like this, like a long thing. And not to mention, all this rate, if you see this graph, like, it's changing every second, right? So by the time they lock in a rate, it could be in the afternoon. Like, it could be a couple hours later. Like, things can change. Like, I want to be, based on what it is today, that the purchase, what I want to purchase is now. Like, when I call, I want it done. So that was obviously a sigh of relief when I called you. It's like, okay, we're going to buy it now. And then if that's your rate, then you obviously, you guys, can you talk about what you charge on the money, or is
Well, it's all based on volume.
Okay.
Right? So, like, usually the banks are at about, from the interbank level, what it's called, those are rates based at about $10 million, right?
Okay.
Those are bank rates where they transfer within funds. If you have $10 million to trade, you don't need me, right? But if you're coming to me with for $1,000,
let's say a couple hundred, like people, my clients are buying investment property, so they're going to be putting, let's say, 20% down or 30%. So like a couple, like 200, 300, 400.
So when you're dealing with let's say 10,000 versus 100,000, on 10,000 you charge 100 basis points, you're making $100.
Okay.
On 100,000, to make $100, you got to charge 10 basis points, right?
Okay.
But again, there's other costs involved when it comes to a business. When you're old, a business is there, you have overhead and you have.
No, there's no, those dude. You guys are way better priced.
No, I know.
In the bank.
But comparison to us,
Yeah.
and our pricing, first and foremost, you're updated on a daily basis in terms of the service that I provide. Yeah. And secondly, your rates are then and there. There's no waiting the 3-4 hours or whatever it is, because they're too busy to deal with you.
You don't even know if they bought.
Correct.
That's even the worst.
And that's another thing. And if you're left in limbo and the market moves 10 basis points or 100 basis points, you're out of luck. It's at their discretion, not your discretion.
Yeah.
So in essence, you have control when you're dealing with us to make that decision, because I can't make a decision on your behalf unless I'm instructed, right?
It's very fun for me to do it though. Buy now. Yeah, you sure? Do it. Let's get it done. And it's just like done. I'm like, it was the best thing.
Well,
I
and then through the process, you see what we do. Once that deal is done, you receive a confirmation by email, and you have the wire instruction and confirmation.
No, it's perfect. And again, like what I want to do is with this U.S. project is basically get it to a point for Canadians where it's like, talk to Steve Zalinardo. Yes, he sells real estate, but if anybody knows me, I'm more of a businessman than anything. So we're setting up a proper organization where it's going to be a one-stop shop where you basically, you're going to buy the real estate property. We're going to manage it. We're going to get you to deal with various mortgage companies. If it's the big sixes here in Toronto, or if it's American banks, and some of them are Canadian that are there now, like Spark Financial. And then ultimately, like, you're a huge component to this too, because ultimately you have to get Canadian funds into a U.S. dollar in order to purchase. So you're like a vital part of this, where clients, their deposits need to be transferred. And when you're buying new construction through the U.S., like, you got to get the money there. Like, you got to give $5,000 in the spot, which usually people do with a credit card. But ultimately, you got like 3 days to get the other 10% or whatever it is. Sometimes it's 5 days. But you got to deal with directly through the big six. It's a long procedure and it's bullshit. You can't really talk to anybody. You can't get anybody in the hold. It's just very long. That's why with you, it just makes sense for me, because I like everything done fast and productive, right? Like, everything's efficient. So I call you, you lock in the rate, I send you the money, you mix it in, bang, it comes back up to my Canadian account, then I transfer it to the US. Because I think, can you elaborate on that? Because maybe people think that when I give you money, you're the counter that brings the money right to the US.
Well, basically,
so let's just say I'm new, okay? Like, I just got opened up a bank account at TD. Like, tell me the process if I want to sign up with Philip Magnoli
at Alaris.
Yeah.
And you see, there is a process of, like I said, an application process. Once we get the verification, usually it takes about 24 hours in order to set that all up.
It's very simple. I've done it.
And what we specialize in as well is an ACH payment process.
Yes.
Where we do just debits and credits. Before, we used to take certified checks or bank drafts and having to go to your manager to verify and to certify the item that you've given us. But the process has been simplified, and at the same time, the security is much more elaborate today in respect of the safety of your money in terms of transferring. It's just debited and credited. Usually, for individual accounts, we can only credit local U.S. dollar accounts. So that's why you have to establish your U.S. dollar account here, and that way you also have control in the direction of where your money is taken from you and where it's sent. But that's what our basis is, and that's how we benefit in terms.
Can I just break in there? So I've done this. So basically what it is that I'm at TD Canada. If you open up a U.S. Canadian account, which is basically it says Canadian, it says U.S. funds here, but it's not it's not in America. It's a U.S. account here. It's basically just to move, if you have U.S. dollars, that's where the money would go. So what the process is that if I tell Philip to buy, he says, okay, so I have to credit
the Canadian account.
The Canadian account where you're going to withdraw the money.
And then
and that's the Canadian U.S. account, right?
Yeah, no, your Canadian dollar local account.
Canadian dollar.
We would debit that, and we would credit your U.S. dollar account accordingly. And then from there, you take the money when you have to, you will save money. Like I said, I had an individual who bought a place in Boca Raton, Florida.
Yes.
And I was discussing it was in the 2007, 2008 time. And the houses and condos were going for $700,000-$800,000. He ended up picking it up for maybe $400,000 or $500,000.
Yeah,
Saved a lot of money.
Yeah.
But he called me a day later, and the exchange rate at that time was a differential of $8,000 between the bank and I. And again, I'm trying to maintain my clientele, not for the short term, but I try to maintain them for the long term, because that's how you stay in business, how you're sustainable. That's how you have a reputation. I've been in the business 30 plus years, like I said, but it's for a reason, because people trust me. And if you didn't trust me, I wouldn't be doing your business.
No, you wouldn't be here if I didn't trust you.
But again, you have to earn people's trust.
No, 1,000%. Obviously, when we started the process, even with Rose's referral, I was, obviously has the money slowly, and then ultimately it's where we need it to be. It's perfect. And like you said, it's very streamlined. So you debit from our Canadian account, it goes back into our U.S. Canadian account. So you see it right through your portal.
Yeah.
It changes what, maybe at 24 hours, 48 hours.
Yeah, it's usually settlement is usually 24 hours.
Okay.
Okay, but your confirmation tells you the money's been done, the transaction is done. Then the process is in the hands of the banks. If you deal with the bank that we deal with, you'll get it on a same day basis, right? Because we maintain our accounts with the Royal Bank.
Royal Bank,
right?
Okay.
But if you are at another substantial financial institution, it'll take 1 day basis, right? But we have methods of getting it there same day if there's an emergency of some sort, by actually possibly wiring, going outside of what we call the ACH payment process. It's just simple because it's more secure.
ACH is an American program, right? Because I have that in
I think it's all within
my
banking
US
system all around the world.
but we can't access it here in Toronto though, like in Canada as a like an end user. Because I have that in the US. ACH is how I send checks out. And they physically send checks. But I can send it. If I can physically send a check.
It's strictly, I guess, it's a debit credit type of relationship. But it's a much more efficient way of doing things and less costly. Because remember when you breathe, sometimes you have to pay for carbon tags or whatever it might be. You walk the wrong way, it costs you money, right?
Trust me.
How's
your luxury tax?
Oh yeah, it's doing well. But the aim of what we do is, first and foremost, the benefit is the rates, the service, and ultimately the safety.
Yeah,
those are our concerns. And good businesses relied on you're only as good as your last trade.
Yeah,
let's face it, right? If you do something good for someone, you're going to be remembered and you're going to be referred. Sure. If you do something bad, you're done.
Yeah.
But this company, again, was founded it's been in existence now since probably 1999, 20 plus years in business. And I've been with the company now for the last 6 years, but I've known the director since inception.
Yeah.
And I've never seen a back office as efficient as we have. And again, they're probably the best I've ever worked with. And that's from the banks that brokers that I've been with. Like I've dealt with good people along the way. Don't get me wrong. But the process and the company in terms of how they function, it's off the charts. And I'm grateful.
No, that's good. I'm like I said, I'm happy with the service and everything, and it's perfect. Like I said, it's that deposit, you debit that account, you transfer it into the U.S. account, then I make a call to TD. They wire to me. They wire to my U.S. TD account, like right into America, and then and sometimes even from there, I'll just wire directly to the builder for doing new builds.
Yeah.
It'll be directly wired to, let's say, Pulte or Lennar. So it's like, so you debit. You resubmit the money into my U.S. Canadian account, and then I'll do a wire from TD Canada directly to the builders, which is just like a very stream.
Ultimately, my function is to save you money.
Yeah.
If I can't save you money, then you don't need me.
Exactly.
Right?
Yeah.
But if I can, and I keep you aware, and like I said, there's another aspect to this, is the fact that if you're closing 6 months down the road and you have a preferential rate today, I can show you ways to lock in that price so you don't have to worry about fluctuations in the market.
Yeah, fair enough.
And like we've seen what's happened here when we had an 80-cent dollar at 125, and all of a sudden we're trading at 140. So if you've made an investment in the States, and when you bought it at 130, right? And now you're sucking wind, right? For you almost 10 cents on, let's say, $1 million. That's $100,000. Yeah. I'm just making the math easy. But the point of the matter is, when you bought the property at that time, you could have locked in. And sometimes it's, there's benefits to it, knowing your cost. But
if I locked in, what would the rate be?
It would have been at whatever the rate was at 130. Yeah, it would have been at that point in time. But that's if you had known, if someone had
growing pains.
But the banks won't tell you that.
I get hammered all the time.
No, but it's something that
absolutely.
I would make you aware of your options.
Yes,
right.
Especially in the market that's with instability now. If I had that option, I would have locked in, Because a 130 in hindsight is not bad at all. Again, we're at 138 or whatever it is now.
Let's say if it went to 120, it wasn't a good decision, right?
Yes.
But we don't know what the future brings.
We don't know.
We didn't know what, today brought. We didn't know it was going to snow, right? Yeah. But it is. The thing is that it's what you have to do for the betterment of that moment and the decision that you make.
Well, if someone's not risk adverse, like me, I'm not really risk. Even though I may look at, I'm not. I'm very, 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 very very conservative. Even my jacket's blue. I'm very conservative through and through. But it's like, I think I would have locked in. Hey, but this is what I bought. I ran the numbers on affordability. I'm not going to gamble. If it goes to 120 or 128, who cares?
That's exactly
my
point. But that's if someone had taken the time to make you aware of the options.
There was nobody of my kind prior to me going. That's why I started this journey in the U.S. because there was this empty void. And now I see, like, I don't follow anybody really on social media that does this same, like my career in real estate. I'll be honest, I don't. And it's like, but I hear now that there's chimes like a million people like doing Florida stuff now and stuff like that. It's the truth. Like everyone wants to go. Thing is with me is like I have a legitimate business. I have an E2 investment visa. I'm legally able to trade real estate there. I'm like I'm in there legit, right? There's no bullshit. My E2 investment visa just got approved. What's today? Friday, so on Wednesday, and that was like a 12-month journey to get everything approved by the U.S. consulate and the U.S. embassy. Everything is like koshered now, right? So even going forward, like we're going to have a legitimate business. I'm going to have a real estate license down there. I'm going to be able to trade legally. And I'm going to put together this whole package. Like I said, someone like yourself, Philip, where it's like, hey, this is your steps. You're going to talk to this mortgage broker to deal with the mortgage. This is the houses you're going to buy. This is the mortgage broker you're going to speak to. This is our
currency trader,
foreign exchange, currency exchanger, Philip. And just keep going down the pipe. And then ultimately they'll have like a checklist of things they have to do. So it's simplicity. So they can benefit by having great returns on investment, by great real estate, having 1 foot in, 1 foot out. Like we don't know what's going on with this economy. At least you got half your money out of the country, let's just say. And if that was thriving and that starts going bad, you can bring it back. Like people have choices, but they'll have like a streamlined effect where there's no pains like that I'm currently going through. Like, to be honest, if I had the option, I probably would have locked in. Knowing me, I would have said, okay, I bought the house at this. I know what this is what we ran our numbers in, right? Because I don't trust what's going on and I don't understand it because that's the first thing I said. I need somebody to understand money. I was reading books. I was trying to do everything. I was Googling YouTube. I'm like, what affects the currency? Maybe we can get into that. Like, what affects the currency? What should I look out for so I can time this damn this purchase of exchange at the perfect time? This is why I put you on. So it's not because of like, even we get better rates through you, it's the service. Like, I need to understand this because this is not like a one-time thing. This is like ultimately we have to create this function back and forth for the next 5-10 years as we're moving money into the U.S. So
well, it's all based on the world. The U.S. dollar is the benchmark currency of the world.
Yes.
Everything's traded against the U.S. dollar, but it seems as though there's a shift that's coming. There's a lot of variables that affect money. A lot of black swan events that affect money. We had, it started from 2000 when you had the World Trade Centers collapsing.
What happened with the exchange then?
Well, they brought interest rates to 0%, basically. Yeah. It just because they thought the economy was going to they needed to make sure there was liquidity, that there was fear, right? And fear is what's it stops people from spending. And then we had the subprime lending in 2007, 2008, where a lot of foreclosures happened in the United States.
What happened with the exchange there? Well, do you remember the rates that
I off the top of my head, I can't, but there was a lot of volatility, right? And at that point, I remember too, when things happened in the United States, they don't have, like I said, they didn't have the protections we have here in Canada. And we thought that could never happen here, where people, foreclosures could happen and people losing their houses and everything they worked for. But,
when did 9/11 happen? What year was that?
9/11 was 2000, 2001, and around that area.
It's 2000, I think 01, right?
Yeah,
01, maybe 03.
It's over 20 years. Huh?
Construction. I just started. So 2001, we're at 157.
Yeah.
Holy shit.
Well, you see that there was also an issue there with Quebec separation at that
And it
time.
affected our money?
Oh yeah,
2000.
yeah, because they thought I remember at the border of the Quebec border, they were offering 50 cents for a Canadian dollar, so two Canadian dollars for one at one point, because people just wanted to get out of Canada or get out of Quebec at that time. But the Canadian dollar came under huge pressure, but then it was also based on deficits. Deficits then were minuscule to what they are today, right? The other thing is that they're printing money left, right, and center. It's like it's always the go-to, but there's nothing backing the money today. In 1970, we used to have the gold standard where you had an ounce of gold to issue $1. And now that relationship has gone out the window, and they've used the printing press as a means of, supplying the economy with liquidity, and there's so much more. Like, there's so many variables that affect the currency. It's a matter of you just getting on at a position in your life where it makes sense to you, where you don't have to worry about things, right? But ultimately, it's going to affect you if you're moving from one country to another, and you have to be aware of the exchange rates. It's like interest rates. A lot of people don't even understand the concept of interest rates. They keep buying with their credit card, but yet they're paying 30%, and it takes them 30 years or more to just pay the minimum balance, right? You don't want to be in that position. But currency exchange and the variables there that affect it are affected every day. And usually it happens by the end of the week. Like for today, we had the non-farm payrolls in the United States.
What was that? And it came out, what, 200?
Yeah, they came 311 or 17,000. They were expecting 205,000 jobs, but they created more. But the unemployment rate went up to 3.6%. Then wages went up 0.1% or 0.2%, and the participation rate went up 0.1%. And then you look at Canadian rates. The unemployment were up 22,000 today.
But what do you think? Where are these jobs going?
Well, a lot of government, jobs that are being created, babysitting jobs, I don't know exactly. I'd have to look at the breakdown in terms of the sectors and where they're evolving from. But then you have to look at if they're full-time jobs or part-time jobs.
Yeah, that's what I'm saying. So it could be just a based at Starbucks, right?
And, we're in a situation today where a lot of people's mortgages are coming due, and there's going to be a shock factor here where they locked in at 1 or 2%, and now they're going to be paying 6 or 7%. And, you have to rob Peter to pay Paul. So if they can't come up with the money, or they don't have any financial backing or someone to help them, they're going to have to work, right? They need a part-time job or something else in order.
That's what I'm saying. That's why I'm saying I feel like it's going to come down. We're on thin crust right now. So sorry, 2002. So 9/11 was 158. Imagine 158.
158, yeah.
And then 2007
is 60-odd cent level, 63 cents, I believe.
Wow. And then 2007 went down to 94. So our dollar was worth more.
It was more
this dollar.
And that's when that was funny. I'll tell you, in
was it like 15 years?
I approached my family in New York at the time when the dollar was at 60-odd 3 cents. I said to come to Canada and invest your money. I'll manage the portfolio. Real estate was next to nothing. I remember a bungalow in my neighborhood was $140,000. A bungalow, maybe less than 200,000. The 2 or 3 years prior to that, 1996, that same bungalow went for $270,000. So I said to them, with your dollar being at, you're getting 50-odd% for your money, come here, buy real estate. And the tracts of land were nothing at that time period. Then the reverse happened, 2007-8. Our dollar, the U.S. dollar, imploded. It was time for Canadians to go buy U.S. property, and they did in droves. Because that's part of my business, is to help people buy their foreign exchange so they could buy the properties. And at that time, there was a flood of money going into Florida. That's when I met Rosemary.
Oh, yeah, fair enough.
At that time.
Yeah,
right?
There you go.
And that's how
your buddy in Boca Raton that bought in Boca Raton.
Yeah, they bought all at that time because the property values imploded. right?
So what would have to happen in the U.S. in order for us to have like a stronger dollar, or just vice versa? Like what is this is like, obviously this is out of my like context of what I do for a living, and I don't. Well, I know there's a million factors that are gonna happen, like you're saying, black swan. But ultimately, like what, like in simple matter, like if we had to like do a synopsis of like a few things, factors, just to kind of revert the dollar.
Well, I think if for the Canadian dollar to get stronger,
Yeah, so
I think that you have to watch the deficits, right?
so the U.S. deficit.
No, the Canadian deficit. The government has to manage its money. You went from a $30 billion deficit.
But so they're both spending at
They are at incredible rates.
yeah,
But like I said, the U.S. dollar is the main
yes,
player.
feeder.
So what happens, regardless of what happens in Canada, it is the benchmark in terms of the direction. So if the U.S. dollar weakens, the Canadian dollar currencies will strengthen. If the U.S. dollar strengthens, all the other currencies.
What do we want America to do? So like this, do we want them to keep printing money? So
They don't. Well, I
so that it implodes.
you know what? I don't know what the future brings, but if you keep doing what you're doing, ultimately something's got to give. And
You're concerned more with the money that they're printing.
printing, I think, is the big issue. It's a huge
Are
issue.
they going to shut down the House because of something was happening, threatening the Biden administration because of the overspending? Was it now that the newly appointed representatives are Republican of the House, right?
Well, if they have a debt ceiling in the
Yes.
the debt ceiling there is to keep the government functioning.
Yeah.
And they've been raising it each and every year. So all they do is to keep people paid is raise the debt ceiling so they can pay their salary.
So they're just printing more money.
Just printing more money.
So that creates more inflation.
And that's what's creating inflation. And there was a great...
Are they going to print more? What do you think?
They have to.
Probably.
They have to. Otherwise...
On the debt ceiling being raised? I know they were talking about
They did, but they wanted... They wanted certain assurances
from Biden
Republicans.
administration.
No, from the Republicans and the Democrats.
But the Dems are the ones spending the money right now, right?
Well, when you have a majority, you can pass whatever you want, right?
The Republicans now can stop it
They can stop.
because they have the House and the Congress, right? They have both parties.
They you know what? Who at the end of the day, it's a matter of them discussing things in order to get things accomplished.
But
Bipartisan.
the Dems can't pass anything without the
That's right.
Republicans approving it. Not like our country now, where the liberals can pass anything because they've basically seized power with the NDPs, and they can just everything's a majority. So the House, because I know they passed that Bill C-11, which was falling very intently, and how the process was, because I never really followed a bill. This one concerned me, to be honest. And it was literally process was the liberal government put it in the House. From the House, it goes to the Senate. Senate reviews it, sends it back with a few amendments to the House, and then the House approves the bill. That's how bills.
So we call democracy.
Yeah, I guess
That's what we call
there
democracy.
was this. I don't know what the Senate does. Like they did fuck all there. That was like they added in amendments, and then the libs said if it affects the original structure of the bill, we're just not going to change it. The amendment. So it's like I don't understand. It's like a bait and switch, switch and bait, or bait, whatever that word is, right? Switch and bait.
Switch and bait.
It's just wild. So then I'm just looking at I'm just thought this is always going to revert back to invested in currency, but it's like, so if the Republicans now control the money, let's just say, like the Dems can't go out and spend money without the Republicans approving these bills and all this stuff.
There's always checks and balances
Because they control.
So, you know, for them, the Americans themselves, in terms of making the decisions that they make, it's good that you have input and discussion before you pass something. But in this case, I think it's gone too far. In essence, in the position that they're in, that they have no choice.
So if they don't raise the debt ceiling, then the economy shuts down.
Well, I think
It doesn't
just recently, this past week, you had the Fed Chairman Powell. He was in front of Congress giving testimony, and he was asked a question that you know, if his projection to raise rates, and history dictates, is that in the past, by raising interest rates in times of inflation, it usually would cost jobs.
Yes.
So inflation rate's now at 6.4% in the United States. Their target's 2%. Their unemployment rate's now at 3.6%. So if you want
Was it prior?
about 3.45, just recently, it just went up like the 1 or 2 basis points. But the point of what was said to him by, I think, Senator Kennedy was the fact that if history dictates the process, if we keep increasing interest rates, that means the unemployment rate is going to continue to go higher. And there was something that I read where it stated that 68% of Americans, if they lose their job, they will not be able to afford their 1 month of living expenses. They have no savings.
Yes.
The people in America, it seems like they're living paycheck to paycheck. And it would be devastating to the economy if you can't pay your bills, your credit card bills. And so basically, he made a suggestion, in which he basically accepted as at the end of the conversation, that if the central bank stops raising rates, is there a way that the government can help in terms of easing the inflation pressure? And the answer was yes, by cutting spending, and in order to try to bring the balance without affecting the unemployment in the country from going higher. So it's like a slippery slope in terms of what they're trying to do, but maybe they're trying to use the sledgehammer approach that they used in the 1970s, where interest rates went from 10% to 20% as a doubling. But here, when interest rates were at 1/4 of 1% to where they are now at over 5%, it's gone up 16-fold.
Yes. Yes.
Right?
Yeah.
And remember, people were overstretched in terms of buying, right? Because they were thinking interest rates would remain low for the foreseeable future.
Yeah.
They're not good. They were talking about negative interest rates.
We experienced this firsthand because we obviously sell the real estate, but it was that fear of missing out. The press did a shit job for us, let's say the public, right? Because ultimately we're listening to radio, we're watching media, and it's always like, oh, the houses, they keep getting more, and there's been bidding wars, and it's just, they create this fear of missing out, where it's like, I'll never be able, as a young, let's say, first-time buyer or something of that nature, it's like, I'll never be able to buy it. Even I felt like that at some point. I'm like, lucky we got everything in place. We got our investment properties, got our house in Nobleton where we're good. And then the mentality was people were taking on this massive amount of debts. And I didn't hear this more than once. And not by just the mom and pop or the end user just having a normal job. I'm talking like professionals in my industry, in the lawyering and accounting, whatever, any type of professional and development. Like, it doesn't matter what status they were, from let's say like a general laborer all the way up to like a developer, let's just say, like that whole trend of money between them. And it's what they were telling me is that they can never raise the rates. I'm like, why wouldn't they? Because it's going to fold the economy. I said, but they've already seized power. Like, they can do whatever the hell they want. They're not afraid of not getting voted in, because now when the Libs and NDP form the majority, that's it. It's done. They were in power indefinitely for 3 years at that point.
Well, the central bank's supposed to be an independent body, but unfortunately they've been influenced by court and coordinate. There was that. It's for the first time in history that the Bank of Canada is actually losing money, but who becomes responsible for the losses that they incur? The taxpayers, and they're always the go-to person. And the government was introducing spending bills that were basically the Bank of Canada's printing money for the programs, and there's people are making money at the same time by the interest that they charge. So more the institution. There's some history things that I've
the gap between wealthy, like uber wealthy, and like the middle class is there's no middle class.
Middle classes are being eroded. You're either it's like South America,
isn't that
the rich or poor, right?
Rich or poor, and that has to do a lot with the oil too being expensive. That just trips obviously the shipping costs, that's fuel costs, everything between, all the costs of living because of the oil prices. I heard this recently.
It's affected your food because production, the commodity prices. But there's also something going on too with this inflationary. There's certain sectors that are actually experiencing deflationary periods, which, like lumber, it was down like 73%. Shipping containers, from what I was told through some importers.
When recently, or
recently.
Yeah, is there a 370 a linear 4-foot, right, for lumber?
Well, there was, but there was the shipping containers at one point when there was the what do you call it?
The rush of the
people. There was a shortage.
Yes,
of supply. Yes, supply chains. Excuse me.
Yeah,
there was problems there, so they were renting shipping containers to get product. But the cost of the shipping container for some of these companies went from 3,000 to 20,000.
Yes, yes.
Now they're back at 3,000 per se.
Okay, so
right? So, but there's been a deflationary cycle that's happening within certain sectors. And the other one that I was reading about was Nike shoes. They have, and you know how this shoe business now is huge for especially the young kids.
Yes.
Buying and selling.
Yes.
They buy a product for $100, they're selling it for $500.
Yes.
Right?
Yes.
They're making money because they're limited in production.
Yes.
The company isn't stopping. They're still producing, and they have in North America in a worldwide inventory of excess of 84%. That was Nike from what I was reading, and in North America it's 68%. So ultimately, when you have too much of a commodity, the price has to come down. So get out of it now and wait for prices to fall in order for you to get back in.
I'm watching like the luxury markets for sure. Like obviously sports cars and stuff like that. I'm always watching. Like clearly, one day I'd like to have a Ferrari, and that's like the goal, right? And I have a Porsche now, but it's like watching the prices of those cars.
Is that the one I scratched outside?
Is that the one that with it won't be in this weather? I won't put that thing on salt. He's joking.
My car slipped.
Yeah. No, but it's like it's so I bought I think about 120. It went to 160. Now it's back to I just saw yesterday like 129. Let's say the Porsche, the like watches specifically like just like a benchmark watch like a Rolex Submariner, which is like the go-to. It's like if it's the apocalypse and you got to pick one watch to your last watch you'll ever own, it's a Submariner Rolex.
You just have a Timex.
Do you?
Yeah, it took a licking, keeps them.
Absolutely.
But it doesn't tick anymore.
But look, yeah, there you go. That's why you got to get a Submariner. So it's like at the height of the market, they're at $22,000. And remember, this watch was like 5K, 5 to 7,000, let's say 10 years ago. And then now they're about 15,000. 15,000. So they've dropped about a good 30 points. It seems like all the market, like housing, luxury, is all dropped like between that 25 to 30% range already. And if you see now going back to Porsches, because obviously I have interest in it, and I always like, I used to see what's going on, right? If you look at when I bought my car in 21, it was if you wanted a 911 under 100, 30, 140,000, you had like 11 choices, and usually like the first 6 are like shit. And that's all of Canada. Now there's like 104 more. Was it 140 or 400? I think it was 400 at this range now. Maybe at a higher price range. But I'm saying usually, okay, let's just say with the whole 911 market between 2018 and 2019, there's maybe 111 units, and you can afford maybe 11 or 15 out of those because those were like around that 130, 140 mark. And then now there's over 420. Let's just say the last time I checked. So do the math. And that's only 2 years, 2018 to 2019, because that's like between my model.
A good friend of mine said his father told him that he got into the financing business. He goes, there's more people in this world that need money than have money.
Yeah, fair enough.
So, that's why he's in financing. I'm in foreign exchange to try to help those people save some money.
Fair enough.
Right?
That's why you're here. Yeah. So that's it. I think if you had to make one wild prediction on when to buy, what month do you think this year?
I personally think with the U.S. dollar, I think what's keeping the U.S. dollar elevated right now are words and the threat of rising rates.
Okay.
Right? But they cannot, in that economy, they will not be able to sustain high rates and keep unemployment is going to affect unemployment. So ultimately, eventually, I think there's going to be an inversion where rates have to start coming down.
What month do you think?
I think, you know what? They're going to raise in March here and May. Okay, they promised in the United States. I think here in Canada,
they're done.
They discussed today that they won't actually lower rates because the employment numbers were good.
Right, yeah.
They were good. So they're just keeping their foot in the door in the event. But that's why we can have an implosion in the U.S. dollar, because they'll get to a point where they can't raise rates further without really affecting the economy. And there's like we were talking about before, a 3 to 6 month lag in terms of decisions they make today and the effect it's going to have tomorrow. And I think in the foreseeable future, their decisions will have to be reversed and rates start coming down. And that's when you're going to see the U.S. dollar fall and the currency strengthen.
So you would need the interest rate to start dropping.
Yeah, in the United States, because I think what they're doing today is by creating fear, and
I don't see it dropping.
no, and talking about raising rates. And I think that's the way the Fed acts, is by threatening the market, or threatening, because there's other factors as well. You have the Chinese and the Russians creating a new currency based on precious metals, right? Now, with all the hoopla that's going on with Ukraine and other diversions in the world, we don't know what's really going to happen tomorrow. But the bottom line is that people are being affected in the economy, in their sector, and where they're living. And that's what's most important, is that you have to protect what's there, and how things are going to affect you and your family. That's ultimately what's going to make the decision. And if the Fed sees that it's affecting families in a negative way, the cost of living, like there was a discussion here that their food stamps, they have 42 million Americans on food stamps, and they're reducing their benefit from $230 to $95 in an inflationary market where food, and the decisions that they're going to be making is going to be, instead of buying milk for the kid, you're going to be buying soda pop. So there's going to be an effect on the person's health. Ultimately, even more cost. What are they doing? They're going to be indebting people even further. That's one.
I don't see them reducing their rate at all.
I don't see. You know what? I can't. I'm not saying it's going to happen, but it's going to come to a point of saturation where they might have to look at things differently and maybe reverse course. I'm not saying it's going to happen today or tomorrow. Like that's what could happen in terms of trying to see the reversal in the currency market, right?
But just, and we'll wrap it up soon. But I mean, if historically, prior to a federal election, you'll see rates decrease. Obviously, if you're trying to create optimism in the market. I can pull up on the chart here. It'll show like exactly where these rates start fluctuating. Clearly, next year, like 2024, is the year that we're going into like a federal election. So my prediction, even last year, was like 1 year prior to a federal election, you're going to see rates starting to decrease to create optimism, and people have a short-term memory, and then ultimately everybody's good again. In the U.S., you think that'll be the same process? They'll start reducing rates because right now it's the Dems are losing power naturally, and they want to hold power, and the Republicans.
How do you get the economy started? How do you get? You have to create liquidity.
Yes.
Right. If liquidity stops and there's no investment because the cost of investment is too great, you can't build if the market's not there.
Yeah.
And the cost of doing business is not viable.
Yes.
Right. So you're going to come into 2024 in the United States with
a steer election.
Probably November.
They're starting their primaries now, right? I think for the Republicans.
Well, they had the primaries. That's why.
Not the primaries. Sorry, the majority leader for the Republican Party. They haven't picked one yet. They're all all they'll have like a.
Oh yeah,
I forget what they call that.
They're
yeah.
What you're saying is just whatever they decide to do is this.
Who's going to be the leader of the party?
Yeah. But at this point. Let's just talk about what usually leads up to an election, is that you need liquidity in the market. And look at the stock market. They talk about the Dow Jones, I saw it twice today, over 500-point losses in 2 of the last 3 days, right? Because of the increased interest rates. It stops investment, stops people from spending. And when that happens, what are you going to do? Ultimately, but people stop. You have to give them incentive again. So ultimately, like I said, it might not happen today, but it could happen 3 to 6 months from now, and we won't see the effects of their moves until that time period. And then they'll reverse course or make another decision at that point, which could have, again, will affect the economy, will affect the rates and the currencies, because they're all interconnected. The whole economy is interconnected in terms of how things function. But sometimes, things might, like you saw that one day, a drop on your computer might have been an error, most likely. But the thing is that, I've seen more volatility in the last few years than I've ever seen in my whole life in the business that I've been in. And, instead of, 100 basis points, we see 200 basis points movements, right? In a currency, which was unheard of at times, right? But the thing is that volatility today is very extreme, And if you're aware of where things are, you can make more decisions based on leaving it in the dark. So that's where, getting back to where we started, is that's where I come in respect to try to give you that vision, or that that window to what might matter to you as an investor, and looking for a better currency exchange.
That's awesome. I we'll wrap it up. But so going down, so just to kind of understand where we're coming from, there's a lot that goes behind currency exchange. This is why we have Philip on board with our investments going forward for myself and my clients, because like how much goes towards picking the right timing, understanding the currency exchange. You just can't go to like your big six banks and just order money and not understand the ramifications and all the stuff behind it, but what's the cause and effect about how money changes. So this is good. I'm glad.
Well, no pleasure. And one thing I want to mention is that, you don't always have to put all your eggs in one basket. You can also buy in increments.
Yes.
Right? So, you always have one foot in rather than both feet out. And that's what I try to, it's like average costing in terms of buying stocks or anything. You can do that with currency as well. And that way, ultimately, if you're finding a downtrend, you can make those purchases slowly and improve your cost.
That's what we're doing with you now.
That's right. You're buying in increments, right? Yeah. And if it gets that to a point where you would really like it, you can lock in the full amount, right? Well, I'm trying. I'm rubbing my legs together.
Make a few calls.
I'm rubbing my legs together.
Make a few calls and get it.
I'm becoming hairless.
I love it. Anyway, guys, we're going to wrap it up. If you have any questions regarding today's conversation, you can always comment myself. I can get Philip to respond to them. I know it's a very intricate topic. And again, who would have known currencies is this complicated? But again, this is part of the process to buy in the U.S. This is why we're looking at it so much in depth, to make sure that we're making the right decisions for our clients. Also getting the best rates, getting the best and safest way to get their money to the U.S. and purchasing houses. So that's pretty much it. And have a great day, guys. Ciao.
Thank you.